my largest holding, Avanti at one point in time was over 60% of my portfolio. So I could deal with those drawdowns and I could get sleep. So it's a very, very personal thing. So I mean, ultimately, if any investment is making you sleepless at night, it's just not worth it. One thing what I would like to tell your viewers is that one has to start very, very early. Now, don't try to become an A stock picker from day one. Or you can, but then you have to read a lot before you start doing that.
Hello everyone, this is Neil Borate. I am Deputy Editor at Mint. Today we have a very special guest, somebody who embodies the investor's dream. We all at some level dream that our investments will do so well that we can just stop working, retire early, live our life to the fullest. My guest today has actually achieved that. Pranav Parekh is an ex-banker, but more importantly, he is an avid investor and was one from a very early stage in his career. And he's achieved financial freedom at a very young age. So let's talk to Pranav about his life, his investing, and what got him to where he has reached. Hi Pranav.
Hi Neil, thanks for the intro.
Pranav, tell us about your career.
So my career started back in 2004. I joined a company called Edelweiss, which used to be a very, very small setup then. The company had maybe less than 60 employees then. And the first stint or the first role at Edelweiss was investment banking. So I started out trying to deal with small companies who were looking at raising private money and nothing related to equity markets then. Did that for about 1 year, didn't really take to it in a major way then.
So when you say private money, you mean debt?
No, not debt. It was only equities. So helping very small companies raise private capital in the sense from private equity guys or VCs. VCs also weren't that active in the country then. So that gave me some insights into financial modeling, into making good presentations, which is something which I wasn't good at all in the early days.
Pranav, what year was this?
This is 2004. I joined Edelweiss in 1st of April, I think, 2004. And within about 1.5 years...
Start of the financial year, huh?
Yes, yes. All my jobs have largely been either 1st of April or 1st of June.
Or April Fool's Day, that's
So started off within an investment banking team.
Was that internship related to the stock market?
No, that was also more corporate strategy. Nothing related to markets. But since then, within B school also, me and a few of my close friends were all constantly discussing equities. So as soon as we started earning money, we went in 2003, got our demat accounts opened. With our first meager salaries, we had started investment then. And what do we have to buy? So we were very, very passionate about equities. So when I went and told Naresh then, so he was like, you know what, you like equities, so we'll move you to research. And I was like, I like more
Sorry, Naresh?
Kothari, who was a senior guy at Edelweiss. Right. So Naresh was like, you know what, so we'll move you into research. What do you want to do? Large cap, small cap, which sector? I was like, no, small and micro caps only. So once he moved me into research, this was, I think, somewhere mid-2006 maybe. Pardon me on dates, I'm not very sure. But so when I moved to that side, I had a boss there called Sriram Iyer. And he was really, really nice. I mean, he saw that I was energized about the subject. He gave me a broad framework on what I'm supposed to do. And then he told me that you go travel and you meet as many companies that it doesn't matter whether you write a research report or no at the end of it, but you go and meet. And part of the idea was also that Edelweiss at that point in time wanted to establish relationships with as many corporates as possible. And so I was allowed to do that. And so I would just ensure I traveled once every week or once every 2 weeks. And all over the country, I just went around meeting companies. Thoroughly enriching experience for me. I mean, I got to learn about so many different industries. I got to get to interact with so many promoters. And for me, being a kid then, all these people used to treat me quite nicely because of Edelweiss.
Yeah.
This thing. So it was a very, very lovely experience. And then after doing mid and small cap research for about almost 1.5 to 2 years, what ended up happening then was that there were very, very few clients who were taking interest in mid and small caps. So from being brokers...
That's so hard to imagine given where we are in this market.
There was absolutely no interest. So, I mean, institutions, so no one wanted to meet. In fact, my sales team only would tell me that, you know what, screw all your ideas. All clients need to put in sizable capital. It didn't matter what upsides are there, but it's not executable. There would be a few HNIs with whom I would go and talk to, but I mean, that didn't cut in much ice because there was no real business.
But what surprises me is that 2006-7 was the fag end of that bull market. So,
but that bull market was largely led by large caps.
Right.
So there were certain sectors like construction, infra did very, very well. And that point in time, like, so I was covering mid-caps like across multiple sectors. So I used to cover the whole home products, or like, so be it Greenply Group, Century, Kajaria, Somani, like all the tiles guys. I used to cover all of that. So Edelweiss at that point in time have come out with like almost a 1,000 or 2,000 page report called it was a grey book, such a thick one, and it was on the whole infrastructure sector. So every infra company in the country was represented in that report. So I had like few companies which were part of Asahi India, and few of them which I used to cover were part of that. Asahi also that point in time used to be a micro cap. No one would touch it. So yeah, I was part of that report. So that gave me exposure into like what the institutions wanted, blah, blah, blah. But then, see, when I took up a job, I was very clear from the beginning, I'm doing this so I can earn more money, so I can invest more money, I can compound my way out of this slavery. So I was very, very clear. So then after 2 years, when I went into my boss, said, look here, I mean, there's no money here. So he was like, boss, but what you're doing may be great work, but we are making no money. So on what basis are you gonna? So then I was like, so what do I do? So they were like, you can yap well, you come in sales. So then they put me in the institutional sales thing. And that area, I took to it like a fish to water. So in a way, that was like, it came very, very naturally because of my research background. I could talk to very senior people quite easily because I had depth in my subject.
But how did that differ from your earlier job, which was equity research? So here, the sales job was across market cap, across asset class, right?
Correct. Across market cap, across asset class. Frankly, the way I took it was that in the very early days, it was like I had to get an opening with a client. Like, how do I start talking? If I'm going to go talk about the same Reliance as Larsen and Toubro's, no one's interested in talking to me. I'm another guy giving the same gyan. So I had to like differentiate and get an opening. So people were open to talking to me that, look here, this guy has some thought process. He can like talk to us about some interesting things. So my small and mid cap experience really helped. And since I was looking at stocks for a very, very long time, I have this habit of reading like multiple annual reports every year. So I mean, which a conventional sales guy doesn't do ever. So I mean, that way I was lucky enough that very, very senior guys were quite open to talking to me, and they also guided me a lot in my process or in my journey through the years.
So this shift to sales was in what year?
2009 maybe.
So after the crisis had hit?
Or yeah, before the crisis. I got married in 8, yeah, before the crisis. 7 maybe.
Right.
7 mid-year or something like that. I don't remember.
Right.
And after that, there has been no looking back on sales. So I've just been, sorry, you were saying something.
No, just wanted to then come to the next chapter in your career.
So then, then I was in Edelweiss till 2010, and then an opportunity this was post Edelweiss IPOs. I mean, all of us were quite rich with valuations that the company had gotten. So ESOPs, yeah. But the salaries were still quite meager. So, and then...
what was your first salary?
My first salary when I joined Edelweiss was sub $18,000 a month.
And how much of that were you investing in stocks?
I had this discipline that we have to invest at least 50% of what we get in a month. So what we would do is within the first 3-4 days of the month, we would deploy that 50%, and then I have to last the balance month with whatever is left. So we were like very, very dogmatic about it from our internship days, not only when we started earning, continued with that discipline through our career.
So those would have been quite frugal days.
Yeah, very, very. But it helped that I'm born and brought up in Bombay, so my house, food, those kind of expenses were taken care of.
So you kind of did an SIP then, like?
Yeah, in a way you can say that. Yeah, but with a very substantial portion of what we were getting after tax.
Right, but in a single stock?
No, not in sales. It was all diversified because it depended on. In fact, in the initial days, so I would like keep something new came, then we were like, chalo, this month this something new came, like.
Right.
So in fact, once we moved to sales at Edelweiss, our ecosystem was such that all of us in sales are very, very keen to do personal investment. So like everyone is constantly talking ideas. So it was a different scene only within the organization there.
Okay, after 2010?
So 2010, JP Morgan came about. So I got almost 2-3 times what I was making at Edelweiss, and I was like, okay, I've made it. So JP Morgan happened. My boss there was Manish Prasad, who was a really, really sweet guy. And I got exposed to a totally different world at JP Morgan versus Edelweiss, like where you are a very hyper organization, a very fast growth organization. To come into JP Morgan, and processes are important. We have to do things only in a particular way. We don't have to go after everyone. So target the big fish, don't bother about the small fish. So it was a totally different scene at JP Morgan then. And then JP Morgan continued. So it was like a smooth ride for about 5 years. And then again, the same thing, like salaries stagnated. And then I was like, now I need more. So why am I doing this? And then that's when Jeffries came about. And then lingered in Jeffries for about 3.5 years. Work was slightly different. I got to service US clients for the first time then. So that was a different challenge and fun also.
So were you selling US stocks?
No, Indian stocks to US clients. Right. Always been like selling only Indian stocks. And largely like before Jeffries, the US opportunity came, I was servicing only domestic institutions. So I was doing that for, even Jeffries, I think the first 1.5 years was that. And then this thing came about. And then did that for about 3.5 years. And then I was like, and there again, there was no growth for 3.5 years. So same thing happened again. So I was like, no, why am I doing this? Now, then when I went and spoke to my boss, he was like, you know what, it's the time where we can't. And in MNC is like, what sort of reasons come up? You know, in some part of the world, like something happened. And then, you know, we have to pay our dues for that can't which has happened. And then... So always new reasons would come, but not much of a difference. And then, and by then my investments had also done all right. So
a lot of our viewers might think that you are able to be financially free because you are an investment banker and the salaries are enormous in investment banking. Is that the case, or is it that you invested really well and your investment income took off far more than your salary?
Firstly, our salaries were all right. I mean, I would not say they were top quartile. I mean, we were all right.
Right.
So it is, salaries can never get you financial independence, in my view at least.
Yeah. Because expenses.
And no matter how much you spend, no matter how much you save, you can curb your expenses to a great extent. Curb your travel, curb your child's education, curb like many things, but that's not going to get you financial independence. That I was clear from day one because I come from so our family business is investment in equities. So from a very early age, I have seen the power of compounding and I didn't need to be convinced on it. I mean, I was in a way born with it. So therefore, when we were getting like meager internship stipends also, we were clear that let's just go and start fast.
Yeah. So it's your dad who sort of...
my uncle, my first cousin, my dad, like all of them were together in it.
Right.
So it was...
Okay. So now walk us through your investing career. At one point, you were investing almost all your salary in a single company, right? So can you tell us about that?
So that happened like say 2011 through 13, 14, I think. So like for almost 2 or 3 years, I'm not very sure exactly, but there was this company called Avanti Feeds. So this company first we had invested in back in 2003 when we were interning. So at that point in time, obviously, I mean, we had hardly any money. It was a very small quantity. But because of that, I had been tracking that company from 2003 to now. So when I saw the inflection, that there is a major change happening in the industry.
2003 to 11.
Yeah. 2003. 11, I started buying 12. I don't remember when, somewhere in that range. And when I saw that time, that company's market cap would have been sub 100 crores or lesser than that. So a major change. Globally, the industry was on a particular type of, this company is into shrimp feed and shrimp processing. So globally, India had really suffered on the shrimp market, and the industry was considered really bad because there were a slew of IPOs initially and everyone had lost their pants in them. So the whole industry went nowhere for over 1.5 decades.
It feels kind of strange to think of shrimp in India. Like when I think of shrimp, I think of Forrest Gump.
Yeah, so what happened is like India was making a particular variety of shrimp, which wasn't the global standard, where Southeast Asian countries like Thailand, Indonesia, Vietnam were very, very large, and Ecuador was really nowhere in the scene then. So India just then had started to import the new the different broodstock of it's called Vanna Mesh shrimp. Black tiger is the larger one. This is the smaller whitish one. So when India started importing that, you started seeing a huge uptake in production. So you could see that in Avanti's numbers that suddenly revenues are growing at a relatively quite a fast clip. And the company was available at like a stupid market cap. It also had a partnership with a company called Thai Union Frozen, which is one of the largest in the marine trade globally. So given that pedigree, given this promoter has been around, it's a relatively clean balance sheet. It had some minuscule debt, which they paid off in the first year of Teji in the sector. So when that started happening and looking at this industry is like a few $1 billion or $5-6 billion and growing globally. Here is this company who has a good pedigree and India has a large coastline. So many things can happen. Obviously, I didn't make projections. I didn't know what will happen, but I was clear that this price seems to be ridiculously stupid. And now that's when we started buying. And then every quarter or every year, you were only getting supporting data. There would be a few quarters where earnings also would crater when raw material prices would go up. And this company, through the first 4 years or 5 years of buying or investment in it, has had drawdowns of over 50% at least 5 times.
Wow.
At least 5 times.
How did that happen?
Because volatility happens. When raw material prices really go up, you're not able to pass on everything. So the way the industry works is you cannot squeeze the farmer. So any feed manufacturer is not going to increase prices so the farmer gets screwed, because it's in their interest that the farmer stays around longer. So every year you have someone to sell your product to.
And that didn't shake your confidence?
No, because I was clear that the leeway to growth here is so large. In fact, now I'm still holding it, one of my larger positions, and it's been almost 5 years of negative returns. But every year the company has generated free cash flow. This was a company which had some debt when I invested. Now they have 1,500 crore plus cash, and the cash is growing every month or every quarter. So why should I worry?
And how many times is it up since the time that you invested?
Started at less than 100 crore market cap. It went to a high of almost 13,000 crore market cap, and now it would be at 6,000 crore market cap.
And you're still holding on?
Yeah, I think it's a great time to buy more of it, honestly.
You not exited in this entire...
I exited a bit because we ended up buying a house. So we funded payment for our house through our equity portfolio. Both of us had thought about taking debt. It would have been easy to get debt, but I just couldn't, we couldn't get sleep with the thought of paying so much interest. So we were like, might as well use this. And I was quite clear that I'll be able to compound my way out of it. So, we took a call that based on what our savings will be after paying for the house, that much we'll work, that many extra years we'll work on the number that we need to reach.
Yeah, but in hindsight, if you had not bought the house, you would actually...
Oh, of course. But then I wouldn't have had the house. In COVID times, I think I depreciated my house fully.
Right. Okay, so that was your big position in 11 to 14. After that, how did your style evolve?
At that point in time, in the early days, I was quite open to buying large caps also, which were going through a bad time. Actually, now also I can say I'm open, but I've moved now more and more to small and micro caps only, because I feel that's an area where I relatively have some edge, because I've been tracking companies for a very, very long time. And it's an area which is not as hyper competitive. People will come and jump to trade very quickly and get out when there is momentum. But these companies, when they're going through a bad time, there is no one. So, to buy also is a challenge, to sell also is a challenge, but I have duration on my side. So, it's not like I have a finite time. I can hold for a very, very long time.
So, big institutions, they won't enter these companies?
They won't, because the same reason I told you when I was in small and mid-cap research. They need to put in so much, so it becomes like a 0.5% or 1% at least of their fund. Utna stock hi nahi milega.
Right. So, over time, have you gone down the market cap ladder?
I'm agnostic. I also had bought large in this company called Glenmark, which is quite large. So it's not like I'm against it. I would veer more towards sub 500 or 100, 200. It's not like it's cast in stone, but if something like that comes, I think I will be more attracted towards.
Right. So currently in your portfolio, how many stocks do you have?
There are about 20 odd stocks. Top 5 would be about 65-70%. Top 10 would be about 95%.
And doesn't worry you that it's so concentrated, especially with the top 5 stocks?
No. Concentration is good. I think it would worry me if I were to be diversified. Because I can, as I told you, my largest holding, Avanti at one point in time was over 60% of my portfolio. So I could deal with those drawdowns, and I could get sleep. So it's a very, very personal thing. So ultimately, if any investment is making you sleepless at night, it's just not worth it.
Yeah, if you could deal with that, then now it's
the piece of cake.
So now you're able to meet all your expenses and more through dividends alone?
Not through dividends. I have to sell stock to fund it, because dividend, there have been many stocks which I've bought off late, which large positions which don't pay any dividends. So it's long-term endeavor would be to live off dividend, but I don't know. It's okay. Whenever I need something, I can sell some stock, and it's quite simple.
Although I guess most of your compounding happened till 2018, right? When there was no long-term capital gains tax, and post that, now you have to pay 10% every.
Correct. But 10% is okay. And tax is only on profits, as they say.
Yeah.
So it's, I have to make profits first, and then I have to worry about tax.
Correct.
And compounding has been fine. If I look at my journey over 20 years, I've not calculated, but I think I'm easily would have done more than 30% IRR. Very easily, I think.
You make it look easy, but it's not for most
No,
people.
it's just about being dogmatic. You have to keep reading. So what I do is I spend 4 or 5 hours every day reading newspapers, magazines. And then I've really taken to sports in the last 1.5, 2 years. So like I'm playing 2, 3 hours a day. And I'm trying to get more actively engaged in philanthropy now. So
And you travel a lot, right?
I
That's the first thing.
travel a lot. Yeah, I mean, just after I quit, took off on a 400-day self-driven road trip all over India. So, which was a surreal experience, and it gave us such insights on our country, which I don't think I would have ever gotten doing these short duration holidays. The diversity, the culture, the food, how nice generally people are in smaller places versus we urban creatures.
Any favorite experience?
Too many, you have to ask me what genre, then I will be able to tell you. But I mean, culturally, Bengal was really enriching. Assam was lovely. We loved the Northeast, Arunachal especially. Bhutan was a super experience driving through it.
Yeah.
Too many things there.
You've taken the conscious call not to have kids, right?
Yes.
But you can easily afford to. So what was the thing?
Not about affording. I mean, it's about what I want to do with my time. So I didn't want to put the best years of my life behind a child. I mean, and I feel that in a way I'm being more selfless by not having children because I can do a lot more for other children. So if I were to have 1, 2 or 3 children, then all my attention, all my resources would have gone only there. The fact that I don't have children today, I can give my time and resources to so many more.
Is that the focus of your philanthropy? What do you do there?
I'm agnostic. It's not particular sector. So I'm part of this thing called Social Venture Partners, which is a group of about 500 odd people all over India and about 100 plus in Mumbai, which is people like ex-professional or current professionals like us who want to be more actively engaged in philanthropy. So it's not just about cutting checks, but we want to see if we can help NGOs scale up, help them with their fundraising, with their tech. Our group is all diverse, people from tech, people from legal, people from finance, people from marketing. So we have so many skills within the network, which we can really help NGOs with. So we are trying to...
It's money plus expertise.
Correct. Money is the smaller thing, honestly. It is more expertise and more time.
So your current portfolio of 20 stocks, is that all mid and small or is it mostly mid and small?
Yeah, the largest stock that I hold is Glenmark, the largest market cap stock.
Right.
Which I've been holding for before I quit. So this 2018 ke pehle se. And then I doubled when COVID fall happened.
Oh, you doubled when COVID?
Yeah.
But apart from that, the rest are all...
Yeah. I used to hold a lot of Tata Power at one point in time, but then I sold that.
So with this current mid and small cap rally, I mean, you would have seen a massive increase in your portfolio. How much would you have seen in the past year?
I don't know, but it's been quite good, yeah. No complaints.
Have you booked profits? Are you worried about...
I booked a little bit of profits and then I ended up buying something else. So it's not like I'm sitting on any cash. I mean, 1-2% cash I'm sitting on. That's nothing to write home. I tend to have this propensity because my problem is I have too many ideas and I don't have money. So and generally through my 20 years, I've never taken a significant cash call. Maybe it's something which I ought to learn, but it's worked all right. So, I mean...
Including in 2008, you did not?
No. 2008, I was cleaned out. I think our portfolio was finished 50%.
COVID, you did not?
COVID, whatever cash I had, I deployed.
Oh, that would have been a small amount.
Small amount, yeah. But then that became very large.
Right.
Quite a few stocks which have gone 10, 20, 30 times from that price.
Oh, is it?
Yeah.
So what is your investment style or philosophy, broadly speaking?
I tend to veer more towards value, but... I mean, where I get value plus high potential growth, what would you call? I give you the whole example of Avanti. What would you call it?
Honestly, it's hard to say. It's probably been value at some point.
So it was high, it was deep value, but then there was anticipation of very large growth. And you get opportunities like that. You don't know when the growth will come. So unlike a conventional investor who wants to time everything to the T, if I get my price right and I feel that there is a long leeway for growth, I'm more often than not okay investing.
Yeah, you don't do the typical thing with Excel sheets.
No. I abhor that. My professional journey at least taught me that much.
So tell us more about, you use an iPad?
Yeah, so my iPad is my only research toolkit that I have, and I use a few tools. I think Screener is one tool which I use, and I use Ace Equity, and a whole host of subscriptions for industry trade journals, magazines, newspapers. Those are things which it's simple. I just spend a lot of time reading. That's all that is.
So, for example, you would not create a model and say that earnings will grow 10% this year.
No.
What thought process?
No, I'm thinking what can happen in 5 years. So I think that I've bought something today. For example, there's a company called Ceylon Exploration, which I bought now. This management change happened. A bunch of new guys backed by Oaktree came in. And so you're betting that these guys are going to grow volume big time. So now what do I model in it? I don't know. Now, since they acquired, now communication has improved. Now they've started saying that, every year what guidance they are giving. But when I bought that time, there was nothing. They've just come in, they've acquired. And you're getting the stock at their buy price. So you're like...
Okay, Pranav, before we finish, two questions. One is, a lot of our viewers have the same dream to build a sufficiently large portfolio that they can retire. Do you think it's feasible for most people? Like, would you have to have a starting capital or a salary, something that, an edge that gets you there? For example, what was your number when you retired? That this is the amount I needed and that's it.
No, frankly, I didn't really take a call on number, or I retired when I was 38. So we took a call that if ever we need money, we can always start working. Na kuch to somewhere we'll get a job, something that we'll get. Na, so why stress over it?
But did you think that my portfolio is some multiple of the expenses that I need, and therefore now I'm good?
Yeah, I could sustain for a couple of 3-4 years very easily, or maybe a decade we could have sustained.
So, for example, financial planners have this 4% rule, right? You can withdraw up to 4% a year after 60 and then you're set for retirement. Did you have such a...
Sorry, what is this 4% rule?
So let's say you have a portfolio of 1 crore and you're 60, so you're at retirement age. So the planner typically tells you that you can withdraw 4 lakhs a year and increase it every year because the math works out such that...
No, I didn't do any math like that. I was clear, my backup is I can always work, and I was quite certain I'll be able to compound, so that I didn't really stress much.
Okay. The second question is that...
But, sorry, 1 second. One thing what I would like to tell your viewers is that one has to start very, very early. Now, don't try to become an ace stock picker from day one. Or you can, but then you have to read a lot before you start doing that. Don't just start based on some tip, or you read some newspaper article and you just go jump in. You at least before you buy anything, you ensure that you've read up on that company for a good 2-3 years.
2-3 years?
Yeah, at least. So you finalize and then you see how, based on what you had thought, what has happened. Especially for a green investor who hasn't done anything. Or the easiest way for a lazy investor is just put money in an ETF. I think those products weren't available when I started. Today you have a plethora of ETFs which are low cost and they pretty much emulate Nifty. So versus putting in an FD or any of those products, it is... But I frankly have not even done my KYC with mutual funds. So 0 debt, 0 equity mutual fund, 0 PMS, 0 life insurance, 0... At times, if I'm sitting on some cash, the only thing which I do is FD. I don't even like debt mutual funds because I'm of the view that if you want to take risk, you just go take risk in equities. Right. And if you want to be safe, you be in FD or savings bank account. Then what is this debt mutual fund in between? Why should I?
Right. So that brings me to my second question, which is what paths should somebody adopt who wants to get there? So one thing you said is a lot of reading, sometimes years in advance.
Not only on companies, also books. So now there's a plethora of this thing by if you like value, if you like trading, just read up on guys who have done well in their fields. And when you read upon one guy, you will come across what books that guy has liked. So the amount of things which you read is just, for me, Poor Charlie's Almanac made a profound impact. Intelligent Investor was one of the first books on the subject which I read, and I was totally convinced about value investment there. So that point in time, there were quite a few stocks which I would buy where current assets are greater than market cap. And so, you read the more of these guys or these kind of books that you read, I think it will help you to form your style and figure out what you like, what you don't like.
Did you have a sort of ratio that out of your 10 initial picks, it's just 2 or 3 that compounded massively and the others didn't? Typically, there is this...
I'm not frankly calculated, but I can talk about my losses. So I've lost a lot. So there are many companies which have gone totally kaput. For example, there was a company called Sirpur Paper. So I made money in a few other paper stocks, but Sirpur eventually, and I ended up holding it for over 12-13 years, eventually got acquired by JK Papers, but Sirpur guys, shareholders got nothing. So that became a big zero, which was a large position. Then I paid huge tuition fees in a company called Consolidated Construction Company Limited. This, at that point in time, was considered the Infosys of construction. It used to be a debt-free company, very, very good, clean professional management. And what had happened is they had overextended themselves and debtors piled up. To fund the debtors, they had to take debt, and then blah, 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 everything happened. That again went to zero. So,
but obviously your winners...
Yeah, of course, materially. Because, so in my career, I think there have been at least in my investment career, 5, maybe 10. At least 5 stocks I can say have gone over 100 times. And I've held on to them till they went over 100 times.
Avanti and which others?
Avanti went up, then Deepak Nitrite, very, very small position. So I mean, I'm just bragging, honestly. But then Hudson Agro, then Transport Corporation of India, then
So clearly, I mean, 3, 4.
Somani Ceramics also has been.
Right. Okay, so the final bit is when you have ordinary investors competing with the big institutions, with the research analysts, with IIM degrees and AI and what have you in computing power, what hope is there? As in, should anyone even bother? Why not just let those guys manage?
You look at me, man. Proof of the pudding is in the eating. Yeah, why should I like talk about? Let them do what they have to do. I mean, look at their CAGR returns. Yeah. The question is more to them then.
Fair enough.
Okay, I would not worry at all about that. You do what you like doing. You enjoy your ride. Yeah, it doesn't matter what other people are doing. Ultimately, you have to enjoy your game, and that's about it. Yeah. Outcomes sometimes will be good for you, sometimes will be very bad for you. Obviously, I'm playing a high-risk game. I'm bound to like get hurt also. I mean, it's part of the game, so it will happen. I mean, why fear it?
Great. Pranav, thank you so much. It was lovely speaking.
Pleasure, Neil. Thanks a lot for having me over.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.